Welcome people. Today we are going to look back the insane rate breakdown of Euro USD. First, I remove all the drawings and want to start up a fresh. As you can see, the market is in a clear downtrend in daily time frame. We take swing trades in the direction of a daily or 4-hour structure. As you can see, this the daily is creating a lower high, then it created a lower low, then created a lower high, then it break the lower low from here, right? Here it breaks the structure down and created a new lower low. Then the price have to came back into the trading range to grab the internal liquidity or the order block, and then break in the lower time frames and do some structural chips in these areas. Then it will get back down, so we will wait for the retest or pullback to the order block. We never knew which order block it will trade, so we will mark the order blocks in lower time frame in here. Like it can be like we can have multiple order blocks, but we never knew which order block it will react off and reverse from. So we marked our order block, then we wait for the retest. Once the price have made a new lower low, it have to create a lower high into the zone. So we will wait for the retest. It can come up to here and go down, or otherwise it can also do like came up to here then go down, or it can also come up here and go down. So we have three opportunities, so we will wait for the shift in market structure in lower time frame. Okay, right. Now you have got an idea about how we take swing trades. So we will look at an actual trade I took. So I will remove the drawing again. Then I will mark the zones trading range. First I will mark this extreme high, then this extreme low. As you can see, the price created a low, then created a high, then it braked. So this is the break of structure down. Then price have to come into the internal range to grab liquidity or react to the supply zone or order blocks, then go down like that. But we never knew in which zone or which level price react, but we can take rates in the lower time frame. So we have to mark the zones or the supply zones or order blocks into this lower time frame. So it's at the high time frame it is creating a lower high, lower low, lower high, breaking the structure, creating a lower low, then it have to create now a lower high. Okay, so I will go to the forward time frame, then mark the point of interest to take the trade from here. As you can see, at the daily we have an extreme order block here. Our premium order block at the daily time frame, we will mark it at the top. Then we go to the low time frame, then mark another order block from here, another one from here. After mark our point of interest, we have to refine it very accurately. Then this came from here, this can react from here, and this extreme is from here to here. So you can see we have marked three level of point of interest to take our trades. This was the last low created by this downtrend. So We are going to take the trade from here to here. We never knew which order blocks or point of interest the price reached from, so we will wait for the price to come to the point of interest from entry 1 from will be here. If it fail, we will wait for to reach here. If it fail, we will wait for here and then wait for the chipped in market structure in the lower time frame, then enter from here. Even if we fail from here and from here, then if we got a win from here, we are still in profit. Okay, this is the idea of the swing trade. Now you have got an idea how I take swing trades. Okay, so then first my first entry will be from here. I will mark out this time frame. I have to refine the order blocks from here, so I have to go to the lower time frame to take actual order block. So I went to 1 hour, then look for what the price have done here. Okay, price have make a lower low from here, break the structure, then created a internal block from here. You can take a trade from here also, as because it have break the structure, created low, because it have created lower low, lower high, then lower low, impulse break, then coming corrective into the order block from here. So we can take a trade from here also, because we can set a limit from here with a stop loss of 2 pip at the opening. We can set 2 limits at the opening of the order block, or we can set at the 50%, but 50% does not hit, so I deleted. We can at the open and get entry from here, then target this low. Yeah, we can take a rate like that. In the scalp I hit a 14 hour rate. Okay, I'm not take scalp now. I am going to explain the swing trade. So I delete this. After it break down here and correcting here, then it create this low. After creating this low high, then it creates not creating a lower low, it's grab liquidity below this low and created there another high. But this week is mitigation block, because it have mitigated something inside here. Then this was the last up candle or the last candle which break and close. After that this candle close and close below this low. So I'm interested to take a sell from this block, mitigation block, because this week this does not close below this low. This is the candle which close below this low and break the structure. So I am interested to take a sell from this block, because this is the last up candle which closes before the break of the structure. So after marking the my point of interest, I will wait for the price to come into my point of interest. So once I will wait until the price come into my point of interest. Yeah, it came into my point of interest. Once it came into my point of interest, I will go into the lower time frame like 15, 5 or 1 minute. I will go to 5 minutes and look what happens inside the point of interest, POI. As you can see in the point of interest, we look for a shift in market structure in lower time frame like 1 minute, 5 minute or 50 minute. What is a lower shift in market structure mean? We look for structure like this, creating a low, then it breaks this low, breaks this high and this low. This demand breaks the high, then breaks its own low. Then we look for entry from here, the order block which caused the break of the low. So we enter sells from here. This is the idea in shifting market structure. If the price came back, then it can go down. Taps in and we put our stop loss above this high. This is a shift in market structure in lower time frame. So we look for this setup in lower time frame from here. As you can see, it have pulled back here and created a not a low, but it have pulled back and just liquidity from here. Then it created this high. We will wait for the next. It's break this after creating this low, it have created this high, then this high have been break this low. The setup I have explained just now. It have this demand break, this demand level which swept the high and swept the low. So this block, this order block have a higher probability to take entries, because this is the last up candle which break the structure down. So I can take entry from my first entry from this order block. I put an entry at the open of the order block with a stop loss of 2 pip. Is it enough? Yeah, it is enough. So considering the spread, I put the limit here. This is my first entry. I will wait for the entry. It tapped in. My first entry has been tapped in, so I will wait for the. Okay, as you can see, does not closed above. So here also you can see that it have created a high, then a low. This demand level sweeps the previous high and its own low. So this is the last up candle which created this break of structure and lower low. So I can take an entry from here also, because this is the last up candle which break the low and created another lower low, and this is high 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 low high 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 low and corrective structure and form a high low high, and this high have been break the previous low, and we can take entry once it pull back to the order block which caused the break of the structure. So I will set my another limit from at the opening. This one could be approximately 1.5 pip. Yeah, it's enough. So I will set, considering this spread, I will set limit like this and wait for the entry. I just tacked in. After I tacked in, I will track this and went to 1 hour. My target will be our high time frame, 4 hour low. This is our final target. I got 2 entries from our point of interest, because we got a shift in market structure in low time frame, as I explained. Let's see what did the market do. As you can see, it hits take profit. First order one is hit 54R and second one hit 72R, and this trade took 20 hours, nearly 1 day to complete. 54 plus 72, it's approximately 120 hour trade in 1 day, this swing trade. Consider subscribing and see you in next video.